Talk of the day, thought we'd take a look at Macquarie Technology, raising $130 million via a non-underwritten institutional placement to expand its data centre business. It's entered a trading halt. The placement at a fixed offer price of $58.50 per new share. The company reaffirmed financial year 23 underlying earnings of about $102 to $104 million. Macquarie expects its FY23 capex to be in the $60 to $63 million range. Mark Moreland, Macquarie Telecom, big data centre, bit of a darling of the market, isn't it? What do you think of the capital raise?
Well, we use them for our hosting for Conscious Investor and so on. So I've been a long-term client of theirs. And
right. What about Investor?
I used to be
years
ago, and I'm really glad I sold them.
Why?
Because the last few years they've really done poorly.
Right.
And I was looking at it this morning, because I haven't actually looked at them for a while. And since 2018, they dropped their dividend in 2017, and then 2018 up to 2022, it's been down every year. So the profit's just been less each year. And last year it was 8 million, which on a market cap of 1.2 billion or whatever it is, it's on a PE of over 100 times earnings. Now the problem with that is they're showing negative earnings. So the earnings growth's been negative 10.3% over the last 6 years. So earnings have been going down. The market's been kind to it, but it's been keeping the price up, which means the PE's been expanding.
Right.
And on earnings growth like that, 100 PE is absurd. And I can't see, and also their debt load is very high. They've got debt to equity 172% now. They had no debt in 2019 and prior to that. So the debt's been going up.
So obviously the capital raise will help.
Well, who knows?
Right.
The point I'm making though is they're diluting the shares now by circa 10%.
Right.
Because that's what that means.
Yeah.
And now their capex are saying 60 million for next year or something. I haven't got into the details of what they're doing, but their debt at the moment on current earnings would take 28 years to pay off.
Right.
Yeah, before shareholders would see a cent. So
why the turnaround, do you think? Why do you think the market is treating it a bit differently? Because PE's
been high for a long time. So it's not like it's new.
Right.
It's always had a pretty high PE if I have a look at it.
But you're an investor. You loved it. What changed your mind?
I didn't like the way it was performing versus the price.
Right.
And it's a very capital intensive business.
Yeah.
And don't forget you've got Amazon Web Services and Azure from Microsoft. There's heaps of competition.
But Macquarie's telecom is big in the government space, isn't it? Canberra space.
Yeah, and there is a bit of parochialism in Australia where, and probably globally as well, where governments want to have their data processed locally. I mean, it goes through the cloud to get there.
Right.
But anyway, it is a factor, and that's been good for them. But they're not cheap.
Right.
So they're at the expensive end. But I look at it and go, well, hang on, how come their sales have been growing pretty consistently, 6.5% a year, not meteoric, but stable, 99% stability, and earnings are negative 10 with high stability. So sales are going up and they're earning less. I suspect what's happening now is because their debt overhang is so big, with the rates going up, that squishes that 8 million profit just like that. You know, and it may be why earnings have gone down again. It's been dropping every year consistently.
It's a big valuation though.
It's ridiculous valuation.
Right.
I wouldn't go near the raising.
Right. Okay. All right. And NextDC similarly.
I have to look at it. It's not one that we follow.
Look at regularly. Okay. Luke, what do you think of Macquarie Telecom?
Yeah, look, I'll be a little bit kind of the Mark, but I completely understand where he's coming from. So the answer to the question Mark was posing sort of comes from where Macquarie Telecom's come from and where it's going. So the core business of Macquarie Telecom was a telco business, cloud services, very government focused, carved out a very good niche, capital light, plenty of earnings. Getting into the data center business, as exciting as that is, and you can see the structural tailwinds that cloud computing and data centers will have for many, many years. As Mark said, extremely capital intensive, and the problem is you've got to invest all that capital up front. You've got to build these, huge data centers, and then the time it takes to onboard customers. There's that heavy investment before you get that return, which comes through many, many years in the future. So look, I think for something like Macquarie Telecom, the market has been generous to it. I agree with Mark's view there. The reason why is I think the market's looking ahead to what this business is building and the earnings stream that will come through from the infrastructure-like assets that they're building. I don't own it with Merewether Capital. I used to own it in a previous life. I think this is the sort of business I would definitely hold it. I haven't looked too closely at the raise to be able to comment on whether you would take that up or look to purchase. The main factor for why I would say hold though and be a bit more positive than Mark is you've still got David Tudehope, the MD there, who owns, even after this raise, he'll still own probably half the business. And I think he's got a very good strategic view of where this business wants to go and needs to go, and he's very much aligned with shareholders to achieve it. So the fact he is making this investment up front, I trust him to be able to find those rewards at the back end later on. So I'll say a hold for the program, but I'll just be a little bit more positive, but completely agree with Mark's view. The market is being very generous in the short term. And if those profits don't come through, you'll see that PE get crunched. Mark's spot on there that, the market is definitely focused on the future, which needs to come through.
It's a high risk if he doesn't deliver.
But I don't see why, as an investor, you're taking a very high risk on the assumption that they will deliver when they haven't delivered for the last 5 years.
Right.
So suddenly that has to change. Right. And I agree, by the way, the management's I have no issue with the management.
Right.
They're very trustworthy and they've got lots of skin in the game.
But they're not performing.
Yeah, they're not performing. And I suspect their debt is a real issue now. And this is where debt comes back to haunt you. Whilst we had interest rates that were nearly zero, it was no big deal. So people have bumped up debt. Yeah. Now, I don't know how their facilities are structured. Right. Whether that's coming off or whatever, but when they roll it over, it's going to be at a much higher rate, and that's going to be a really big problem. Okay. Which I suspect is why they're doing the raising, but I'm only speculating.
As you both say, it's a bit of a darling of the market at the moment, that's for sure.
Well, you don't make money out of darlings.
No.
It's been my experience.
Oh. Anything that's CSL's a darling.
Well, that's different. That's a quality business underlying that.
Right, okay, all right. Okay, all right, Luke.